Nicole, and those gains, obviously, coming after the Federal Reserve as expected, left interest rates unchanged. I want to bring back in Sonders, Chief Investment Strategist, and Charles Schwab, who's joining us via phone. And Liz, good morning again. I want to ask you said something so interesting before. You said that you like technology and financials right now. I want to get to your view on tech stocks. You said that they're going to be setting the tone, but also you mentioned financials. Does that include Wells Fargo?
Well, I don't cover individual companies at all. I don't talk about them. I don't analyze them. I don't cover them. And, Schwab has equity ratings, and I'm sure we have a rating on the company. I have no idea what it is.
Okay. Had to ask, Liz. I had to ask. So let's talk about the sector then, in particular the technology sector. You said that you really do think that's going to set the tone for the rest of the year.
Yeah, well, no, not necessarily for the rest of the year. We've had a long-held outperform view on technology, so this is not just a trade of sorts into year-end, but do believe number one, valuations have not gotten stretched. Low productivity, pretty limited capital spending, the need for companies to continue to invest in efficiency. And so we think we're still early enough in that cycle that we're maintaining the outperform.
I wanted to ask you about oil in particular. We saw oil at a one-week high yesterday. We had a drawdown. We've seen a lot of volatility in that particular commodity. Today we have a weaker dollar, which helps oil along. How much of a play do you see on oil between now and the end of the year?
I think that stability actually would probably be the best environment. I have no greater ability than anybody else to judge what would be the sweet spot for oil, where it's sufficiently high that it's above break-evens for the producers, but sufficiently low that it benefits what is obviously a consumption-oriented economy. I would think somewhere in around the range we are in. But too much volatility, obviously, on the negative side means we don't get the lift in earnings that is now built into expectations for the second half of the year. But a spike on the high side, I think, jeopardizes the economy. So I certainly would like to see stability more than movement in either direction.
Well, also, with this Fed decision yesterday, I'm curious what you think about the potential of a December rate hike. Do you think there's anything that could happen that could change their mind about raising interest rates in December?
Sure. What I think the Fed has been keying off of, when people talk about the Fed reacting to the market, that doesn't mean that they're watching every wiggle in the Dow or the S&P every day and making decisions based on that. But more broadly, they're talking about financial conditions. And at the heart of that has been the dollar. And so we've been back and forth in this environment from tight financial conditions, which typically is driven by a stronger dollar, and then pretty good equity market, low volatility. All of those things tend to affect financial conditions. And when they get tighter, the Fed backs away, become more dovish. When they get looser, the Fed steps back in. So it really depends on all of those factors heading into December. So I think if financial conditions stay relatively loose, if we continue to see decent numbers on both their mandates, jobs, if we get, still some strength in inflation, then I think they move in December.
I wanted to ask you, Lizanne, we talk about financials. I know this is a group that you like. There's the obvious that as rates go up, that's beneficial to the financials overall. Do you think they're undervalued? What are you looking at specifically?
Yeah, valuation has been a factor for a while. You ran the risk that it was becoming a value trap to the extent the moves in the stocks were solely a function of Fed policy. But now that I think you've got the likelihood of continued rate increases, albeit at a very slow pace, I think that plus the valuation story is a support for the sector.
Well, Lizanne Sonders, it's always great to speak to you, and thank you for joining us so early.
My pleasure. Thank you.
Thanks, Lizanne. I'm glad you joined us. Thanks.